Hello traders and welcome to my daily gold outlook. By the way, I was on a short vacation last week, which is the reason I did not post an update. Anyway, if you remember, in my previous video I explained the reasons for being bullish, referring to this price structure: impulse correction, impulse correction. Stick around until the end of the video because I will discuss some red flags for bulls. Anyway, let's discuss this daily chart that we have on screen. In my previous video, I pointed out and draw attention to the break above this falling wedge and the horizontal resistance, considering this resistance as the target. As we can see, the target was reached twice. Gold dropped on Thursday and recovered some on Friday. Now, moving forward, the structure remains bullish. As we can see, the price has reversed from this support zone, the same resistance zone that I just spoke about. So, what can we do now with gold in the middle of the range? We can look for a retracement to this zone, play the range and target this resistance. As for the red flag that I spoke about earlier, if you draw a trend line from this support, we can observe that we are still below it. Additionally, a reason for concern is this bearish engulfing candle. However, we need a break under this horizontal support level to confirm that a top is in place. Oh, I almost forgot. Let me show you something that also sustains the bullish scenario. Now on screen we have the same gold daily gold chart, but with both 20 and 15 simple moving averages. And we see that the price is above both. The 20 SMA is trading higher, and we also just had a crossover. So one more reason to be bullish. To conclude, I remain bullish for now. I will try to play the range and buy near this support with a target at 1980-ish resistance. That's it for today's video. Trade safe and see you tomorrow. Bye bye.